We're going to get rolling. It's weird not having Casey.
I know, your buddy. Your partner in crime.
You're my buddy, too.
PIC.
Let's make that clear. You're my buddy, too. But here on the MLO show, today we have myself, Addie Net, and of course, Michael Mealy. How are you?
I'm so good. How are you?
Good. We're rolling into it. We're missing our good, dear friend, loan officer and veteran, Casey Carpenter. He got stuck dealing with some car things.
Oh, man. Adulting.
Which was so funny because last week we actually did like a budget breakdown and how to save money and beat inflation together, like an interview thing. And one of the things we dove into deeply was car maintenance because we've all been there. Something happens to your car and it's thousands of dollars.
New tires. It's like
New
there's nothing
tires,
worse than
all
buying
this
new
stuff.
tires.
I want to ask him because coincidentally he's like getting his brakes done.
Did you budget for that?
Did you budget for that?
Did you take your own advice?
Yeah, I think he did.
Hopefully.
I think he like set that
thinking of you.
appointment directly after. Well, today we're going to be talking about the risks of switching lenders in the middle of your transaction. And I think this is going to be a really good episode because we see this quite often, right?
Very often. Where borrowers are either trying to or do or don't communicate it.
Yeah. I think maybe before we get into the details of it, we review kind of maybe the traditional process of like reaching out to a lender, getting pre-approved or pre-qualified, and getting into contract on a home and closing. Because often what we see is people will jump online and just do a quick form fill out on Chase Bank or Rocket something and get what's called a pre-qualification. So I think defining pre-qualification and pre-approval is important. So typically a pre-qualification is very limited information. So you're filling out a form. It's usually a soft credit pull. It's usually all the numbers are like taking your word for it.
Taking your word for it. It's not, nothing's been confirmed.
Right. Yeah. Oh, yeah.
With
I make
documentation.
$100 an hour.
Yeah.
Oh, yeah. I got 100,000 too.
And it's funny how often people, when they're completing their application, and I'm just saying this, when you don't have a lender reviewing it, is people will put like, I make $100,000 and they mean that annually, but they put that in the monthly figure. And so I guarantee that happens all the time on the pre-qual side online.
Oh, that's so true. Yeah. They think that they're putting in their monthly.
Their salary, but it should be their monthly earnings.
Yeah. And there's so many details, specifically in the income bucket. Yeah. So most of the time when you're getting qualified for a mortgage, there's an hourly salary, sometimes bonus, sometimes commission. Overtime, especially like first responders have the most complicated.
Nurses.
Yeah. People just don't know what income does count toward the debt to income ratios, which determines how much you can get approved for. Long-windedly, a pre-qualification is a really easy snapshot. It's a lean back in your chair selfie, no focus, nothing. Just, hey, I'm good. And that really shouldn't be your barometer of good to go or not. We always advise to go fully pre-approved where you're working with someone one-to-one. You're collecting pay statements, bank statements, W-2s or tax returns, and really getting specifically the income analyzed prior.
Credit, yeah.
A lot of times there are situations where you can get it pre-underwritten or semi-pre-underwritten, as I call it. That is a pre-approval. That's the way to go. You have real supporting documentation for the numbers that you have inputted into that box for credit, income, assets. Anything to add on that?
Well, that's spot on. And just to add to that, and having your property that you're interested in being reviewed before you are submitting offers to. That's what we always say. It's like, I like to have my pre-approvals property specific. So the listing agent and the seller knows that I've looked at this specific property tax, this HOA, this specific purchase price, because that can change so much too. And so when there's just these blanketed pre-approvals that are sent out, especially in Oregon right now, taxes, I could go down that rabbit hole, but things are changing so much right now. And in Oregon, I feel like, especially in the Tri-County area, you can have a $450,000 house that has $7,000 taxes, or a $450,000 house with $3,500 or $3,500,000.
Yep.
$3,500 a year. So that's a huge swing in what your monthly payment could be.
Gosh, I love that you bring that up too, because often at these big box establishments or lazy box establishments, I'll talk to somebody through a referral or a lead or a reach out or something, and I was like, great, have you ever bought a home before? They're like, oh, yes or no. Have you got spoken with a lender or a bank and gotten pre-approved? Oh, yeah, I got pre-approved up to 750. And that's true. That's what a lot of people tell them. But to Michael's point, there's a lot of variables that could change that 750. One example is, say you just went in online to big bank mortgages and you typed in that you had $200,000. And they were good. You're good up to 700. Well, they're assuming that you're going to spend that entire 200,000 as a down payment, and blanketly
Such a good point.
letting you know, hey, you're approved actually up to this amount of loan and other variables. So it's just, there's way more context needed to just say what you're good up to.
I mean, for me, that's where our job comes into place.
Yeah.
Obviously, we want the process to go smoothly, but if you do all your homework and due diligence up front, the rest of it should be fairly easy, knock on wood.
Yeah.
But I think it's so interesting how there are so many lenders that just issue those. I always say our pre-approvals they hold our reputation. And if our pre-approval isn't accurate, I mean, obviously things happen throughout the process, but sometimes. But if we have a reputation of sending bad pre-approvals, then that word would spread quickly. So which is why some of the big banks and other online lenders don't have great reputations.
Yeah, and I do think, and I know you would agree with me, but I think there's an importance between your pre-approval amount and then also what I like to call the financial comfort level. So in my pre-approval process, I usually will have a Zoom call with someone. This is conversation number one. If we're diving into, hey, what can I get approved for? It's like, great, tell me your income, the history, how much money do you have? And I show them the reverse model of how we're getting to that figure. So it's the qualifying income minus their obligations for non-housing debt. So a car payment, student loan balances, credit card minimum payments. And I show them, look, based on this analyzation using this loan product, we're good up to this monthly payment amount. So it might be small, it might be large. And before I do anything else, it's like, what would you say your monthly comfort level is? Financial
Let's
comfort
work backwards
level,
towards that.
Okay, I want to be here in this range. And then I show them another chart, like a range of that comfort level. Here's 2,500 up to 3,500 a month. Whoa, okay, that gets us this, that. And I show them the difference. What if we had another $10,000? And they get to see through these charts that really like $10,000 isn't going to move the needle more than 40 to 60 bucks a month. And it's really, I like to go the reverse engineer. It's like, this is how we determine the max payment amount. And then here are 5 different ways we could reach that payment amount and get in your financial comfort level.
One thing that I do on my end is I always give them a quote unquote homework assignment once they've been pre-approved, where I say, okay, if your goal targeted price range is around, let's just say $3,500 a month, I say, go look at houses of between $450,000 and $600,000. Send me 5 properties in that range that you like. And if they qualify for 600, let's just say, and I will run the payment estimates at those buckets so they can actually see, okay, this is what my bang for my buck is going to be at 450. This is the type of home that I qualify for this payment. Am I willing to stretch my budget a little bit at $4,000 a month?
Yeah.
And it's a dream home. Yeah. You know.
And there's a lot of conversations we had too, just with the condition of the property. You might be looking at a 450 home that needs $150,000 worth of repairs and equity and Home Depot trips and contractors. Well, are you in the financial comfort level to maybe have a little more of a fixer-upper and do all this stuff? Or would it be easier in this chapter of your life to not have all that stress, purchase a more expensive home, but reduce all the projects required, right? So there's always that kind of give or take. We also, too, and I know we're going to jump into the switching part. We're expanding on that.
I forgot.
Insurance right now. It's such a huge variable. I mean, bless everyone in the country that's dealing with the hurricanes. I can't believe another one's coming again to Florida. Natural disasters have really impacted nationally. Even if you're not in Florida, they've impacted everybody's insurance.
Wildfires
And there's particular homes like the age of the roof, the age of the property, if it's located in a flood zone or not. all these different things that could make or break your financial comfort level. And I know Michael and I both use the same insurance agent primarily, and that team's been fantastic for us because a lot of the times, like what Michael was saying, hey, send me 5 properties. If something looks like we need to get that pre-ran, or it might be right at the edge of you not qualifying or qualifying, we're going to reach out to the insurance agent and ask for a prelim quote. It's not going to be 100% accurate, but they can give us a really good estimate and also check another box off of the no surprises. Insurance is a big one.
Yeah, we love no surprises.
I mean, there's people that, I won't spend $10,000 more on the home, but then they go cheaper, and the insurance for that particular property is $60 more a month, and you've just done the same thing. Yeah. So it's like really important to have those buckled in. But let's dive into a little more of the switching aspect. So the reason why I think there's a lot of reasons why people might switch. One might be they really don't know the process, right? They think, okay, I'm not really going to get fully vetted. I'll figure it out when I get into contract. Number one, not a great idea, because you're putting anywhere between $500 to $1,200 down just for inspections. Though you do have that period, the inspection period, to review and back out and get your earnest money back. But if you had no chance at even getting that property and you're not fully pre-approved, I don't want people losing $1,000.
Well, I think, to be clear, I think the point in this is, once you're under contract, if you have been pre-approved and you're under contract with a specific lender, the seller has to agree for you to switch a lender. So you can't say, I'm going to switch lenders today. That's a process. So a lot of people are like, I'm just going to switch lenders. And I've had sellers say, I'm not doing it. We're already through the process, or we like this person as the seller, and they don't switch. So to add to that, the context of that,
I'm glad you brought that up, because I totally spaced that. No, that is a big part to it. And then I think it goes into the consideration from the seller's point of view of accepting your offer or not. Let's 100%. Say they had 4 offers. One was from a credit union, one was from a 1-800 number, one was from a big bank, and one was from
local
Michael.
Lender.
Local to the area or the region, really understands the market, very responsive. We had another episode we were talking about independent people like us do not make a living if we don't close on your loan. There is a lot of incentive, not only pride, but financially, to perform and get the loan done and on time. Show up to the altar on time, ready to go. It's a big deal. Reaching out to some, cubicle, 1-800 numbers, big banks.
8 to 5, East Coast.
Yeah, there's very minimal incentive, if any, to close it on time. They're literally, like, even the president of our company worked at a bank for a long time and was describing how that platform worked. It was call, this, that. They're not focusing on meeting these deadlines and communicating and crossing T's, dotting I's. Like, I literally had a client call me a couple months ago who was in the middle of getting approved. The agent went ahead and let them offer on the home, but they hadn't heard if they were approved yet, which is not a fan. You shouldn't be doing that, but she was not advised properly. And I talked through her whole scenario on the phone. I'm explaining it choppy because I'm trying to protect people's personal information, but tell the story at the same time. So what was the plan with this particular submission to underwriting? And she's like, I don't know. I was like, well, I regret to inform you, that's not going to get approved. Yeah. Well, and she showed me the text from the person at the bank. Well, you have good credit and money. We might as well try. That was the plan. And it's just super unfortunate because, like, these are really important things in people's lives. And we're not just like, hope isn't a strategy.
And it's so hard coming as the lender that comes to, like, save the day when they've had a rough experience through the process too, because they're already, rightfully so, a little bit bitter, a little bit angry, a little bit frustrated. So we're trying to save the pieces, but you still kind of get, like, that resentment on you. But again, it's like I said, there's a lot of people out there that don't have to have that reputation in their pre-approval or their customer service because they're protected by these big corporations. And that's a bummer it's kind of like that used car salesman mentality. It just gives us a bad rep as lenders sometimes.
Yeah, or they might elect to work with a company because they want to save a few $100s in fees.
Or they're like, well, my bank, they have my checking and savings account bank statement, so I want to go with them. I'm like, what?
Yeah.
Lame.
Yeah, it's not that hard to forward from
A
your
PDF.
banking app the PDF. I would say to jump into it, a lot of it really just comes down to the interest rate and the cost. So there's a lot of consumers out there that they think that they can get a better deal. When I say deal, a lower interest rate is usually the focus. Now, one of the things that I explain, and I think right now, it's more challenging to really get an apples to apples comparison now than it ever has been. There's a lot of volatility. There's a lot of manipulation in the fees and the prepaids of your taxes. The ability to plug and place estimates of escrow and closing and title costs.
Well, and Oregon's so unique too with how we collect
Yeah.
taxes. So you see that all the time with people that aren't familiar with Oregon property taxes, which is another topic.
It's
But
a whole nother
yeah.
topic. Yeah, the state, because right now most of my business is Oregon, Idaho, and Washington. 3 separate closing cost calculations.
100%.
Dynamically different, like between 4 to 8 grand in some transactions. I think the point that I'm trying to make, though, is it is really hard to compare it apples to apples. A lot of people just focus on that rate, and they do not consider, hey, there's discount points for every single rate. And I try to explain to people, when you can get almost any rate you want within a certain reason of fees, but the lower the rate that you go, the more of a fee there is. So you're paying points or percentages for the discount in the rate. That's where the term discount points comes from. And that's a really, really important thing to look at.
Well, when you don't have experience in what you're looking at,
Yeah.
it's a lot of times people don't look at the final figure, like you just said. They look
Yeah.
at the rate, they look at the payment, and I think you would say the same. Like I always I'd rather review both fee estimates and say, here's where the differences are, here's where they're coming in, here's where we are,
Yeah.
than having someone believe that they're making an educated guess. I'd rather provide that education, even if that means that we don't necessarily get the deal, which might be the case.
Yeah.
I'd still rather, the more people that are informed in this business, in this process, the better.
Yeah. And I think, too, you'll see a lot of people say they get an estimate from me and then they go somewhere else and they provide that estimate to somebody else as for comparisons. When then you're giving them the roadmap to really just manipulate the heck out of a loan estimate. One example that I've heard and seen, a lot of people don't understand that a line item in your closing costs is per day interest. So depending on the certain day that you close in the calendar month, you are paying interest only for the remaining days left in that month. So let's say there are 30 days in a month and you close on the 20th. You're paying 10 days of interest only added to your closing costs. That can be pretty substantial, anywhere between $60 and I've seen $120 per day. So let's call it 100. So you have 10 days at 100. That's $1,000 in closing
Swing.
costs, folks. So if you go to somebody else and they know that you're closing, they can just change the closing date on that tiny little piece
To 0 days
to
or 1
zero. They're instantly $1,000 cheaper. Like, I'm going to save you $1,000 and I'm going to get you 0.1 more in rate. They've really just charged you more in points and changed that closing date. And now you think that you should move. So you hear and see a lot of that going on. Now, there are some places that you can go to get less on all of those. But let's transition into the risks and the pains of choosing something that has a company that has a lack of operations and performance. Because I recently closed a couple of transactions of which we were required to broker out. So here at Mortgage Express, we have a hybrid platform of in-house products and as well as brokering options for unique situations. And these were unique situations. The huge eye-opener for me was the final week before closing was some of the most complicated and frustrating pieces on my end. Like missing documentation, second level manager reviews. Every time they needed something new or an email, you went back into the queue at the end of the line. It's a 24-hour reply. And then there's all these different steps. It was so stressful for me. I spent probably 20 hours in the final week for those two deals just hawking emails, which you normally don't need to, thank goodness. But a lot of people or originators wouldn't care. You'd be stuck in the dark, probably closing late, impacting a lot of contract deadlines and adjusting costs. And you do sense that from a lot of the low budget places.
That was very PC.
Low budget. Do you have some pain points or things to add about the switch?
Yeah, I mean, I think it's funny. Like, obviously, if they're switching to us, we're like, yes, this is great. It's going to go smooth. It's hard. I think that I recently had worked with a borrower for 2 years. I can't tell you how many payment estimates happily that I provided. And she switched lenders at the 11th hour because her realtor told her to. And for me, like we work, like you said, we don't get paid until we close those commissions or close that transaction. Yeah. And so that's hard. I mean, that's a pain point for us, but for them as a buyer, I think there's just risks involved in it not closing on time. Of course, the seller's not accepting that, the switch, appraisal issues. If an appraisal's already been ordered and done with company A, that company not transferring the appraisal, so now you're off on the hook for 2 appraisals. Trying to think.
I would say too, just accuracy and a lot of different things. I've seen a lot of adjustments to different fees and estimates in the final week or 10 days. So if you're
especially with how volatile the market is right now.
I mean, what are you going to do if you switch this on and they gave you this like low ball estimate and then finally you get the closing disclosure 5-10 days before and oh my gosh, I didn't see that. Oh my gosh, my discount points are $2,000 more. Oh my gosh, you changed it from 0 days of interest or 1 to 10 now.
Yeah,
to
that's our real close date.
So now I'm cutting a $3,000 to $4,000 larger check than I had in my brain the entire time.
And I think that we bring this up because...
What are you going to do?
But
Nothing.
this happens. I mean, this
really
does happen in this process, and we see it all the time. And I think as a consumer, when you're not in it, you probably don't realize that could happen or that would happen and that people would do that. And we see it all the time. And there are sneaky people out there, unfortunately.
Very sneaky. And
maybe not even intentionally. I'm just going to give everybody the benefit of the doubt.
I would say there's a lot of people in this industry that want to take the path of least resistance.
Oh, for sure.
And I see it a lot, specifically in the last couple of weeks, and it really boiled my blood, was at that final week where you're issuing a closing disclosure. This is supposed to be a pretty accurate draft, this is
if anything,
supposed to be very accurate.
If anything, it should go down.
Yes,
it
closing, should go down.
If anything.
But man, when you get to that point, you'll see even like title, escrow, and CD worlds. I'm speaking not our in-house, but other brokers, where it's just like, oh, that's okay, this and adjust this, and it's a few $100s. What's the big deal? To me, it's a massive deal. Like I'm representing my client.
There's nothing that frustrates me more when escrow or operations is like, it's not a big deal. It's just $200, and I'm like, you don't have to have that conversation with the client.
$200 is like a lot of money because once again, they chose us who might be on the middle of the road. It's not the cheapest, but the best service you have out there. And I'm going to try to save you more money than you paid me. That is always, whether it's through advisement, education, or hawking over estimates and fees. I mean, I even got into a back and forth with an escrow officer last week about an additional $220 of credits. And I was like, okay, we're going to move to this closing date, move it up here, do that. How about this, add that. And it was like, they were just done with me. Like, are you kidding me? I was like, I really appreciate your attention to detail. I was like, it's $220. Yeah. Like, this is a first-time home buyer. They need every single dollar possible. They have a kid. Like, that's a Christmas for some families. Like, think about that, right? I hate to get like dramatic, but it's a lot of money and it's already negotiated in a lot of sense to be paid for by sellers or it's coming out of their pocket. So we're always looking for people not to waste money. I think
Well, I
that's a great
think
thing.
when the industry shifted to, and I can't believe it's been 2.5 years now, longer than, there just becomes some desperation in the industry too. And people we're used to closing 20 deals a month or whatever it might be, even 5 deals a month, and now we're barely scraping by. And so they're kind of putting round pegs into square holes to make sure that they can get through this. And that's not ideal.
It's not ideal at all. I think too, if we maybe talk about the actual closing day is very, very important. So if you're closing with maybe a big box place, there's really no human attention to your transaction. It's queue based. So you get in the queue and you wait, and then you'll get an email. If you didn't reply within this time, well, talk to you tomorrow. Like it's like cookie cutter, like conveyor belt over versus because with like say Michael or I, like we're waking up in the morning like, okay, this is what we're doing. Like today is your signing day. Did you get it done? Great. Follow up, text here, text there, to the title company, to them. Great.
What is
awesome.
like the most ridiculous location or time that you have either sent a pre-approval or talked to a client? I have 2.
Oh, let's hear yours.
I sent a pre-approval on my wedding day.
Oh my God.
And I was emailing and like working with a client right before I had my daughter. I was in the bed on my computer, and my husband was like, you need to try. I ended up throwing up. Sorry, TMI, but my husband's like, we're done working now. I was so stressed out. But I was like, that's my point being, just like, we just care. And I know of course my clients care that I'm having a baby and getting married, but this is a huge purchase and huge deal for them too. And so as much as our lives, like we still have to have work balance and stuff, there's still other humans on the other side of that.
I don't have any crazy pre-approval stories like that. Definitely different places around the world and traveling and airports like Italy or Mexico.
Oh yeah, Copacabana in Brazil. Like we're crazy.
All
it's
over.
like put your computer away.
Yeah. I would say though too, just the availability is super important in the clutch too, because say something comes up and you have a question, like you got to be able to respond at least through text in the evening and resolve issues. And these are really big things. Like imagine, you've scheduled movers. You got a moving company coming. You might be going from across the country to start a new job. You might have contractors coming into the house these particular days to get this stuff done. So we put a lot of stress on the importance of closing. And I've heard some people just like, oh, whatever. But trust me, you might be lackadaisy about it now, but a week before closing, you're delivering stuff. You got a couch coming, a mattress coming, this guy, this girl.
And the sellers probably more than likely
sellers
need their purchase money. Or their money to do their purchase too. So there's usually always transactions tied to this transaction. It's not just one.
That's the domino effect.
Yeah.
You could be impacting a lot of different things.
I mean, we've all been there, unfortunately, but it's all about communication. And
really
if you have a lender that's not communicating and picking up the phone, my brother is an agent, and they're working with a buyer, and he's asked this lender for a pre-approval for 7 days and hasn't got it. And the buyer's finally like, okay, maybe I should switch lenders. I was like, you think? Like what? We can get you one in 7 minutes.
Yeah, so true. I think too, just like that. At least in this last week, watching the market and the interest rates have been a really important thing, and like working with someone that understands like I subscribe to a couple different platforms for rate watching and understanding the market. Not saying I have a PhD, probably a pretty good knowledge of it, but just understanding the why and why this would be a good day to lock in the industry, what the risk would be to float or not.
It's a huge trust factor.
Big trust factor there. Additionally, looking at your financial plan at it more than just a cookie cutter situation. We've talked about this. A lot of people being like, oh, I want to put 20% down. Often that's not the best use of money. For some people, I like building out options where it's like, hey, if you did 10, 20, 30% down and say you went the lower down, can we put that in a 4 or 5% high interest ceiling account so you have 6 months reserves in case you get hurt, someone gets sick, you lose a job.
Well, even like working with financial advisors where borrowers want to put, they don't want a mortgage and they want to put $500,000, $600,000 down to not carry a mortgage, and working with like the whole holistic picture of your finances, and then having a financial advisor say, okay, well, if you put half of that down and we invested this much
Yeah.
money. Here's what that would look like. They have all sorts of crazy cool calculators to help with that too.
Yeah.
Because still interest rates are higher, but they're still good.
They're manageable.
Historically speaking, yeah, manageable. That's
Historically speaking.
Yes.
I think to summarize the whole thing, we can go through the risks of switching. Number one, you're risking a lot of convenience. You're risking a ton of accuracy on the fee, the rate, your pre-approval amount, right? You're risking the contract because you do need to go back and get approval from the seller prior to doing so. Am I missing anything else? The closing process.
Yeah. I think you nailed it.
That's it.
I mean, I feel like we could talk about it forever.
Yeah, no,
you know, like
we
there's
don't
so
want to beat
many.
a dead horse.
Yeah.
I think the point's across, and it's just really important to look at it as it's a long-term relationship. You're going to get the most out of working with a self-represented person if you're proactive about it. I always say one of the most unspoken currencies in real estate is time and flexibility. Yeah. So the more that you plan out, even if it's just, hey, can I schedule a phone call with you? Me and my partner are planning on buying next year. That is fine.
Oh my gosh.
And if someone's not giving you the time of day for that and not scheduling you out for a 15 to 30 minute phone call, then you don't want to work with them.
No. I always tell my buyers, especially like, I promote shopping lenders. Yeah. I don't think that that's a bad thing. It's just doing it before you start shopping. And I always tell my buyers, I'm like, meet with me, meet with 2 other lenders, 3 other lenders. You will know after your initial consultation, like who you vibe with. And they might have a slightly better rate or we might have a slightly better rate, but you are going to be trusting them, working with them through one of the biggest purchases of your life. And if you don't have that connection with them, I just feel like once you start shopping around, you'll just know. It's kind of like your agent. Yeah. You just vibe with them. You know that this is the person that you can trust. And I'd way rather you shop me at the beginning and know that we have that connection and then there's no more funny business throughout the rest of the transaction. It's smooth sailing than 10 days into the contract.
Yeah, I don't think it's any different than having kind of introduction meetings with real estate agents.
100%.
I mean, right now, especially,
lawyers, attorneys, like
all that stuff. Oh, another thing I forgot before we close out. Remember how I talked about people changing the interest and the fees to make it look better? Another thing I forgot to mention is, say you just call ABC competitor and you're talking on the phone, and to get a quote, they can manually punch in a higher credit score of which they might not know that you have, so that you have a lower interest rate. So they're just, 780 credit score, give you top end pricing when really you have a 720, and there's a big impact on that. That's another thing.
Yeah.
It's been done.
Yes, but it's the more you know.
The more you know.
The more you know.
The more you know. Well, perfect. If you are even looking to refinance purchase within the next 1, 2, 3 months, or maybe even a year, reach out to Michael and I. We have that hyperlink in the text box. And that's description.
There you go.
Subscription. That's wrong too. Show notes. That's what it's called. They can click that and send us a message now.
Oh,
that's a new added feature.
That's fancy.
We actually had one, which is, I'll talk about that another time. But if we can help you in any manner, please reach out. Absolutely. It's not too early or too late for us to help you, and we love it. So even if it's an episode suggestion, you want to build out a mortgage strategy call, or have any one-offs, just let us know.
I love it.
Yeah. Anything else, Michael?
I'm good.
All right. Thank you all. Until next time, we will check you later.
I love that. Check you later.
We'll check you later.
Woo!
The MLO Show is hosted by Casey Carpenter, NMLS 1458123, Addie Nett, NMLS 1542184, Michael Mealy, NMLS 963197. Not a commitment to lock or lend. Terms and restrictions apply. Not all applicants will qualify. Mortgage Express, LLC, NMLS Company ID 40831. Licensed in Arizona, Oregon, Washington, California, Idaho. With licensing in California by Department of Financial Protection and Innovation, DFPI, under the Residential Mortgage Act. Mortgage Express is an equal housing lender. For more information, visit www.nmlsconsumeraccess.org.